Welcome to Credit 201 from Adulting a Crash Course. In today's video, we'll talk about how to establish credit and how to build it once it's established. The first step in establishing your credit is to open checking and savings account. While these accounts don't appear on your credit report, they're very helpful in terms of making on-time payments and ensuring you have the money to pay back any debts you have. Next, you'll want to be consistent with where you live and work. Credit reports with a lot of mailing addresses or work addresses and information make lenders hesitant to loan to you because they think you're irresponsible or unpredictable. If you can, become an authorized user on someone else's credit card. The way this works is the person who has the credit card calls the company and gets a new card issued. Everything about the credit card is identical to the first one that they have, except that your name is on it. Before you do this, you'll want to have a conversation with that person and understand how much they expect you to charge to the card and how you'll repay them for those charges. It's really supposed to be a temporary situation to help you establish your credit so that as soon as possible, you are removed as an authorized user on their card and you can get your own. Another option is to consider a cosigner or co-applicant. So you can apply for a credit card and add someone else's name to the application. This tells a credit card company that if you fail to make a payment, they can reach out to that other person to make the payment instead. Again, two things to keep in mind before you do this. You need to have a conversation with them that this is temporary, and as soon as possible, you'll get them removed from the credit card and be on your own. And second of all, you need to understand how it will impact them. If you fail to make a payment, it will lower their score. So you need to promise that you'll be diligent in making payments on time and in full. Another option is to apply for a department store card or gas card. This one can be dangerous though. Don't think that you're establishing credit if you max out your Forever 21 card tomorrow. Again, the two most important things of a credit score, if you remember from our Credit 101 video, are payment history and amounts owed. It's about being able to make your payment and make it on time and staying below the 30% credit utilization threshold. So if your credit card is for $1,000, you really shouldn't be charging more than $300 on it at any given time. The final option is a secured credit card. This is a little bit different in terms of your relationship with the credit card company or generally a bank or a credit union. It swipes the same at any of the stores and retailers or if you use it online, but it's really more of like a credit card with training wheels. Again, though, this is a goal of temporary. You should graduate, so to speak, to a real credit card within 12 months as long as you comply with the contract and make your on-time payments and are responsible with a secured credit card. Once you've established credit, you can start to build it. Most important is to make your payments on time. Again, if you remember the components of the FICO credit score, 35% is payment history. So being able to make your payments on time and at least make the minimum is really the most important aspect of building credit. Next, keep your credit utilization low. Again, 30% of your score is credit utilization or amounts owed. Add the limits up for all of your credit cards and take that times 0.3 to determine how much you should actually be charging to those cards to build a great credit score. Next, avoid applying for multiple accounts close together. Again, back to the components of the score, you remember that 10% is new accounts. Applying for more than one or two accounts every 6 months will negatively impact your score, and it makes sense. If I'm a bank and you ask me for money and I see that you've asked 2 or 3 other banks for money in the last few months, I'm going to be hesitant to loan to you because I know you have to pay a bunch of people a lot of money, and that's going to make me nervous. Finally, keep credit cards open. Again, this relates back to those components of the credit score. Length of credit history is 15% of your credit score. So whatever credit card option you decide to pursue first as an independent applicant, you'll want to keep that card open as long as possible. The good news is to keep a card open, you only have to use it every 6 months. My personal example is my first credit card was through Kohl's. So every Christmas, I find a Christmas present on Kohl's.com that I can use my card with. And then I just have to find something small to purchase in the first 6 months of the year to keep that card active and improve my credit score. What's also great about this is it's not about how much you charge with that credit card, it's just about swiping it. So you can charge as little as 10 to 20 bucks or maybe a tank of gas to a credit card to keep it open and active in your credit file. That's it for Credit 201. Please make sure to join us for our next video, Adulting Credit 301.